Good morning, good afternoon, good evening, folks. Michael Zuber back with his good friend, Mr. Dan Bird. How you doing, sir?
Fantastic.
So you are helping me learn a new language, a skill to really remove my Achilles heel from stock market trading, which is emotions. I would get too down and I would get too up and I would make all kinds of bad decisions all the time. And that's why I didn't touch stocks for 20 years. You are now
I'll bet when you had a losing position, then you tried revenge trading.
Oh, of course. Yeah. Double down.
To make it not only make back your money, but outdo it.
Of course.
And sometimes with the same stock, because damn it, that stock is not going to take me down.
That stock owes me.
Right.
Oh, how stupid I was back in the day. Well, something we've only been doing about
by the way, the stocks don't care.
No, they don't care.
The market doesn't care what you think or whether you're losing money. It does not care.
It doesn't care. Not emotional. But what I've liked about our last 6 weeks together is you're really removing all the emotion from this. So we've talked about right-sizing your positions called risk management. We've talked about buying in with not a single buy, but with multiple purchases. We've talked about stop losses to protect the downside with your risk management. Last week, we had a winner, right? We bought Robinhood in 2 tranches. It ran a little bit. And we actually got out of half our position. Again, you have a saying that I'll ask you to repeat here why we did that.
Yeah, it's a famous saying, so lots of people probably have heard it, but bulls make money, bears make money, but pigs get slaughtered.
And again, this is something I would have done wrong. If I would have had a winner, I just would have went all in, and knowing me, I probably would have bought more. Which would have been probably maybe not the right thing to do. So again, you're helping me remove emotion. This is not financial advice for anyone. I'm just bringing you along as I learn a new language called technical analysis. So anything you want to talk about what we did last week and what happened?
Well, I have I'm sharing the risk calculator, and this is the Robinhood trade that we did.
Yep.
At the time, the account value was 47. I think you've added some to that. Mm-hmm. Rough numbers, 47.
Yeah, good enough.
So we decided to put in an order at 1250. It was actually trading a little above 1250 at the close on Friday. Mm-hmm. So we put the order in a little below. Mm-hmm. Using the calculator, we had a decision to either use a 7% trailing stop, or we could use the ATR, which is the average true range, the range that it trades in a single day, right? Average true range for this one is $1.30. So for a 1250 stock, that's actually pretty high. It's a pretty volatile stock.
Yeah.
That means it trades $1.30 range from high to low within one day.
Yeah.
That's more than 10% in one day.
Yeah.
So that's highly volatile. And that's one of the reasons I put this particular rule in. So there's 3 rules in the calculator. One is the trade rule for the individual trade, never risk more than 1% of that individual trade. Mm-hmm. The second one is the account rule, never risk more than, this was actually 10% last week. Mm-hmm. This is one of the things we'll talk about.
Okay.
And so what this means is if I buy something and the company goes out of business and it goes to zero, I can only lose 10% of my whole portfolio.
Perfect.
Right. Mm-hmm. And then the ATR rule is volatility. We had this set at 0.75 last week. I just raised it to 1. I'm actually going to raise this one to 20.
Okay.
Now what this means is at 10, that means you can't have any more than 10 trades. Right. At 20, you can't have more than 5 trades.
Got it. Okay.
All right. So it limits the number of trades you can have. It does increase your risk a little bit. Mm-hmm. But the way the calculator works is it will look at each of these 3 and it will take the most conservative one.
Ooh, I like that.
All right. So it'll take the one that's the least risky of all of these 3.
Okay.
And then it will tell you how many shares to buy. And that's the key.
Yeah.
Now, what's interesting about this is when I increase these, when I had this at 10% and I had this one at 0.75%, this is what it showed us last week. You know, 270 shares at 7% trailing stop, or 180 shares at the 1 ATR, which is roughly 20%.
Right.
And we decided to go with the, I won't call it more risky because it reduces the number of shares you can buy. So that keeps the risk the same, basically.
Just a bigger spread.
But it's a bigger spread because of the spread that this particular one trades in.
Yeah, and I think that was the right move. Yep.
Yeah, I think it was the right move on this one. Although I don't think the 7% would have taken us out, actually.
Yeah, I don't remember.
But anyway, we decided to go with the 180, and we entered it on 2 tranches, 50% each. So the stock did go down, and we executed at 1250 on the first one. And then the stock started going back up, and we executed the second one at 1275, just like it shows right here, exactly like it shows here. And we set that up ahead of time to do that, and we set our stop at 990 ahead of time to do all of that.
Yeah.
And that's exactly what happened. So we ended up with 180 shares with an average of about 1262.
Yep.
Was the average 1263, right? It shows it right down here.
1262 and a half, but who's counting? But
1262 and a half, right? Now, what I might recommend, since we've been using this now and you understand how it works, we can increase some of these, make this 20%, which means we can have 5 trades, and we really haven't done 5 trades. So why not?
Sure.
And increase the volatility rule up to 1. I wouldn't go too much higher than that.
Okay, that's fine with me.
So how does this change when I do that? When I increase these risk levels, how does it change? Well, it changes the 7% trailing stop from 270 to 360.
Right.
I can now buy more shares.
But it doesn't.
But look what happened at the one that was more risky.
It didn't change because it's
not
the
change.
most conservative one. I lied.
Right. Did not change it at all.
Okay.
So on any other trades that we do, let's go with these settings.
Perfect. And this is just for me, not financial advice. Yeah, no, I like it. Okay.
That's right. Right.
All right.
So at any rate, that's what we did last time. We can actually look at what actually happened with the trade.
Yep.
So you can see now what happened was, let me go to, I think transactions will show me. Maybe it's order.
No,
status.
it's the sale. Yeah. Oh.
Yeah. Order status will show me the fills right here.
Oh, okay. Cool.
So you can see we bought 1521 that first 90. So remember we had it. I'm sorry, that was the sell.
That was the sell. Yeah.
We bought it at 1250 right down here.
Yep.
So we bought 90 at 1250, and we bought it because it went down, and then it started going back up. We bought the other 90 at 1275. Shows that right there. And then throughout the week, and you can see here on the chart, over here on the left-hand side, on the right-hand side,
there we go.
so this one right here, this big green one right here is the day we bought. That's Monday. You can see it went down to 1170, 1185. So we bought it at 1250.
Yep.
And then it started going back up. And we bought the second one up here at 1275.
Yeah.
And it continued going up all day.
Yeah, it did.
And the next day it went up. Third day it went down a little. Fourth day it went up a little. And then Friday it went up again.
Yeah.
Okay. Now, I was watching this, and at one point during the week, we went into your account. I can't get into your account without you giving me permission to do that.
Yep. Of course.
But we were in there at one point during the week, and I made a change and put in a sell on this first tranche, the one that we bought at 1250. I put in an automatic sell at 20%, at a 20% gain.
Yeah, and again, that is something I would not have done before. I would have let it go, and again, it would have been emotional, and then it would have rolled over, and then I'd have been all in my head, and I would have been emotional. So I love the fact that it's damn near programmatic. This is it, for me to be in the stock market. It has to be programmatic. I have to remove emotion, otherwise, I just can't do it. I can't. I love this because I don't think about it. It's like what I like about this is I have a thesis. I can establish my thesis. I can put in the stops to protect the downside, and also
you can test your thesis.
Exactly. I'm more and more excited by this every week.
So the reason we went in the middle of the week is you sent me a note saying, "Hey, Robinhood's going up. Shouldn't we move our stop up?"
I did. Yes.
And I said, yeah, we could do that. I said, rather than leaving it at 990, which is where we had it way down here, actually is below the low that it was at. What I recommended was we make it a trailing stop. And I said 10%, you said 12%. So we made it a trailing stop at 12%. And I think it was somewhere on Wednesday, somewhere in here.
Yeah.
So we put a trailing stop in there, which means the stop will move up. And there's where our stop is right now. It's at 1348.
Perfect.
And that's based on the high. So the high of this particular day, which is the high of the whole week, that high was 1533. So this stop is now at 12% below that high, 1533.
And it'll adjust every day.
It will adjust. Well, it will only adjust if there's a new high.
Okay, got it. Right.
If there's not a new high, it will stay right there.
Perfect.
Right. So you don't have to think about it. You're at 12% right now. We're already above our buy point. There's our buy right there. Right.
And and we rung the register on half of it already.
And we've already taken 20% profit on half of it.
Yay, my first profitable trade.
You can see over here, right now it's at 19%. So it's pulled back a little bit, but we've already locked in the 20.
Exactly.
Right.
Yep.
And now what we can do is just let this run.
Exactly. Yeah. Let it go.
Just let it go. We can go find another trade. We don't even have to think about this any longer.
That's exactly what I want to do. Ring the register on half and then let it run on, and we'll have trailing stops going forward if I happen to find a winner again. So this is what I need. Okay. I like it.
So this is now just going to follow it up. If it keeps going, if it goes to the moon, then this will be at 12% of the moon.
Perfect. Awesome.
At some point, it will get taken out.
Of course.
Right.
But it will, for me, it'll be taken out at a profitable amount.
You already have a profit. You already are guaranteed a profit.
Yep.
Because not only did you get the 20%, but your stop is profitable.
Exactly.
And will continue to be profitable.
Perfect.
Now, if we do get taken out, and you mentioned before what you might have done in the past is bought more.
Yeah.
That's not a bad thing to buy more, but let it tell you when to buy more.
Exactly.
Remember I said a while ago, it's not the sell point where you make the money, it's the buy point where you make the money.
Correct.
So if this goes up, let's say it goes to 22 and then drops back to 18, we're going to get taken out somewhere around 20, right? Well, then we'll watch it and we'll see if it goes to 18 or 17 and then it starts going back up again. Then we can get back in and start a whole new trade.
Exactly.
Using the same kind of parameters, but we've already locked in our profit.
I love this so much. All right. Well, let's see if we're going to do anything new this week. So I sent you a company that I knew nothing about that I thought we would look at the chart.
Right.
Proto Lab.
Here's the chart.
3D printing.
3D printing. Any particular reason you chose Proto Lab?
No. Just I read an article. I'm like, I believe in 3D printed houses. So this is what kind of led me here, but this is not a housing.
So the big one on 3D printing is 3D. 3D systems. Okay. And what you might notice, let's see. There you go. Let me put Proto Lab back in here again.
Okay.
And we'll go to a 4-month chart. So here's Proto Lab. Here's 3D.
Okay.
Proto Lab, 3D.
Oh, similar.
Look pretty similar.
Yeah. Okay.
All right. Now, Proto Lab is the 8 is getting closer to the 21 and the 50. So it might, if it breaks above the 50 right here, it might do that sooner than 3D. So for 3D, the 50 is at $20.38. And the 21 is at $18.36. So 18.36 is where it probably, if it breaks through that, it's probably going to be starting a new trend.
Got it.
The other thing to notice about this, this is important with technical trading, is notice how as it came down, it hit a low, went up and hit a lower low, went up and hit a lower low, went up and hit a lower low. It went up and hit a low, and we might be making a higher low right now.
Okay.
So that's the first indication that it's made a bottom and it's finished bottoming.
Got it.
that it may be starting to trend back higher again.
Hmm.
I'm not personally, I'm not comfortable that it's really trending higher until it gets above the 50.
Mm-hmm.
But if you want to take a risk on it and get in a little earlier,
Mm-hmm.
and in this case, it's because of this low right here, it actually sets a pretty good stop right around 16.
Mm-hmm.
This is 3D.
Mm-hmm.
On Proto Lab, this one here, the stop is around 46, it looks like.
Mm.
Right?
Yep.
So either one.
Yeah. Can you do me a favor? Take a look at Blackstone. I think it's BX. Just for giggles.
It is BX actually.
I'm not sure I'm going to play with those 3D printers giving up next week, but what do we got here?
Here's Blackstone. Blackstone has had a nice run up,
Mm-hmm.
Pulled back along with the rest of the market.
Mm-hmm.
Now you can see with Blackstone, it actually went beyond the mean. It went beyond the center line.
Okay.
And it went above the 50 days. So that's very positive with Blackstone.
Okay.
But it's coming back down again. So
right. Yeah, I think with what's going on this week, I'm going to just stay where I'm at. I don't think I'm going to do anything.
I don't blame you. I think with the inflation numbers coming, it's going to make, at least at the end of the week, it's going to make the market very volatile. I think the market might actually go up in the beginning of the week based on last week and Amazon and all of that.
Yeah.
But
speaking of crazy, what if Facebook or Meta or whatever I don't know what their symbol is. Is it still FB?
It's still FB. Yeah.
They got hammered. Hammered.
Yeah. So this is PayPal.
Yeah.
This is Facebook.
Wow. Look at that.
They got hammered big time last week. If the market keeps going down, which I think it's going to, and if this one keeps getting hammered, this one could be a screaming buy at some point soon.
Yep. Yes. Yeah, I think there's more pain there. That earnings call was horrible.
Yeah, and their projections were horrible as well. They're for the first time ever, they're losing subscribers.
Yeah, exactly. Yeah.
So I mean, that's an interesting one to watch. Some of the things that they're doing with the metaverse, it's going to take a long time to get there.
Yeah, losing. Yeah.
But if they can really be the play, and I would submit that the metaverse, there can only be one metaverse.
Yeah, it'll probably be like, there'll probably be lots of them in the beginning. It's just like you and I, search engines. There'll be hundreds of search engines. And
that's exactly right. That's exactly the right analogy. There is only one internet.
Yeah, exactly.
Right? You don't have multiple internets, but you do have multiple sites on the internet.
Correct.
And the metaverse will be the same. Yeah. There'll be one metaverse, and you'll have multiple destinations.
Yeah, locations or whatever.
In that metaverse. So you'll have one for Macy's if you want to go shopping. You'll have one for your grocery store if you want to shop there. You'll have one for your favorite car dealership if you want to shop there. You'll have one for playing poker if you want to play games. Yeah. There'll be a destination for lots of different things on the metaverse, but there will only be one metaverse.
Yeah, totally agree.
Facebook is making the play to be that metaverse.
They're going hard, tens of billions of dollars, a lot of big capital.
And by the way, if they can actually accomplish it, I mean, they've got the money to do it. If anyone could do it, they could be the one. Yep. It'll take some time, but once they get there, they will be the ideal candidate to create a sustainable cryptocurrency.
I agree.
So those are some things to watch for with Facebook.
Very cool. Well, Dan,
one idea I'll throw out at you that I'm gonna probably try, but it's not quite ready yet to try it. But sure. These are two ETFs.
Yeah.
These are the triple Qs, which is the NASDAQ. These are 3 times leveraged the NASDAQ.
Oh, wow.
All right. However, there are 2 of them. So this is S triple Q. That's the short. So if it's going down, you buy this one, just like a stock. So as the NASDAQ was going down through January, you can see what this did.
Yep, exactly.
Right.
Yep.
The other one is the TQQ, which is the opposite.
Ah.
So this one goes up when the NASDAQ goes up. So you can see back here last year.
Yep.
So what I'm what I'm going to play with, and I'll do this with, keeping my risk management in mind and everything else, just to see how it works out. I'm going to play off of these, alternating.
Oh,
Looking at the 8 and the 21 right here.
mm-hmm.
I've got this set up so I get a color change when the 8 crosses the 21.
Oh, I gotcha. Okay.
So you can see when it crosses to the upside, it turns green.
Mm-hmm.
When it crosses to the downside, it turns purple.
Got it.
All right. So this is the TQQ, which is the bull side of it. This is the SQQ, which is the bear side of it. Neither one of them are crossing right now.
Okay.
Right.
Yeah.
So if we get a huge rally, then this one's going to cross first to the upside.
Mm-hmm.
And as soon as it crosses, I'm going to buy. And as soon as it shows signs of starting to roll over, like it did back here, getting close to crossing again to the downside, I will sell out of the long one and buy into the short one.
Interesting.
Right.
Okay.
So the short one will be going up as the market goes down. The long one will be going up as the market goes up. And I'll just alternate from one to the other.
That's very cool. It'll be fun to watch.
Yep. So we'll see how that goes.
Very, very cool, Dan. Well, thank you very much for doing this. I love what we did on Robinhood last week. I feel good about ringing the register on 20%, leaving the other one running with a trailing stop, and staying in cash this week. Sounds totally good to me.
But by the way, I didn't tell you that I was putting that 20% on there.
Mm-hmm.
And you sent me a note.
Mm-hmm.
I think it was Thursday or Friday saying, hey, my Robinhood sold. Why is that? I thought our stop was at 12%. It's going up.
Mm-hmm.
I said, yeah. Oh yeah. I forgot to tell you. I put a exit at 20% to exit with a profit.
Totally the right idea.
So,
yep. Very, very cool. Thank you, buddy. I appreciate your time. We will talk next week. See what happens.
You bet.
Thanks.
Have a good weekend.
You too. Bye-bye.